Good morning, traders. Welcome to the morning update from Phoenix Blue. This is Mark Owen speaking, and today is the 24th of January. Well, what have we got in line for today? Well, it's a pretty quiet day on the whole, but I do want to give you an air of caution. The reason being is we have the EU membership court ruling regarding will Parliament receive a vote in relation to Brexit. So it's widely expected that although the vote is expected to be given to Parliament, that it's probably not going to make much of a difference, that we should still remain on track for a hard Brexit. And if we look at what's happened with sterling over the last week, it's been quite an interesting 7 or 8 days in the trading market. So last Sunday we saw the market gap open down 220, 230 pips to see it regain all of that. Plus, it's gone further another 250. We're about 500 up since the open. So sterling has reacted very positively to Theresa May's speech, and then obviously this move's been highlighted by the selling of the greenback. In relation to other news announcements, this week is very, very quiet in relation to last week. So the other reason for caution is because we believe that liquidity is still not quite there in the market, and especially after the inauguration of Donald Trump, what we've seen is we've seen markets move to safe havens. We've seen a selling of the greenback. The question is this just a retracement, or are we waiting to see what policies are actually going to get put in place? So our advice would be make sure that you're very, very disciplined, wait for the corrections, and then wait for that confirmation, because there is no direction at the minute. We're just seeing corrections and the market whipsawing. You've got dollar strength one day, then it's a loss of dollar strength, and you can see this in the market. The markets are very, very turbulent. I put it down to lack of liquidity as well. So if we look at the dollar index, this is a very good gauge of direction for the dollar. And if you look pretty much since Trump's election, when we saw a one-directional move in the dollar, taking it from the mid-95s up to 104. So that was pretty much a one-directional move. And what we're seeing now is a short-term correction. It's coming back down, and it's coming back down into support, what was resistance. So this is it's a key area for us, but we want to correlate this with other major markets to see if we can see that the dollar is going to take see if the correction's finished, and we're going to resume with the dollar strength. So be patient, because it could quite easily just break through here and come back and test this lower trend line. So wait for your rules to be met, and then obviously take the trades accordingly to your risk management or portfolio management. The euro dollar, what we can see here is we can see that we've got a consolidation rising wedge forming. We're looking for this market potentially to pull back down, but then to push up again. We're looking at shorts in and around the early 108s, 108.20 up to 108.50. That's going to be my sort of area for looking to take trading opportunities should it present itself. And then we would look to see the dollar resume its strength. We are looking at dollar strength throughout the course of this year. Fundamentally, that's based on monetary policy divergences. So we would expect to see the dollar resume strength, but again, expectations, we've shown last year that expectations can be completely wrong when we look at what's actually happened throughout the world last year. Many things were expected in terms of the markets and they actually didn't materialize. So just be careful, wait for the news, wait for the announcements, and then wait for your rules to be set up. So think of yourself as a conditions-based trader. I think that's the best way. So once the conditions globally, whether it's your fundamentals, meet with your technicals, then you've got a perfect setup. So that's euro dollar. Dollar yen, we're seeing something similar. We saw price stall with a double top. It's come down. It tested one area or key area of support, at which point we posted a potential inverse head and shoulders, and we said if we get a close above this wick here, then we'd be looking to get back long in the market, because that correlated at the time with the dollar index. However, this move failed. It's broken down. We've seen a sell-off in the greenback, and we're keen on dollar yen in and around 111.20 to 111.45. Sterling, as we mentioned earlier, the previous week, it closed at just above 122s and then opened on the Sunday evening below 120, only to see the market yesterday at one point touch highs of 125.45. So we'd probably look to see this market come up and test this neckline area in around the even handle of 127. Fundamentally, we are bearish on this market. We do expect the sterling to take a bit of a beating in terms of where we're going to finish with Brexit. However, once we get down into the 120s, if we go below 120s, then in terms of long-term investment, I see the opportunity and the reward to the upside. So I think if we do get a push down in anywhere back down the 120s, 115s, over the course of the next 6 to 12 months, that's going to be a good buying opportunity with the trade deals that Theresa May, the Prime Minister, is trying to set up. You've got to ask yourself, yes, there's opportunity to the downside, but if you're a position trader, you can start looking for long-term investments and where's the reward? Yeah, if you look at where this market can go at 124, let's say it goes to parity, that's 2,400 pips. Okay, so it's a decent jump. If it went back to 172, the previous highs, you're talking 4,800 pips. So there's twice as much reward at current levels. So if we can drop anything 800 or 1,000 pips, which I probably wouldn't be surprised if it did, you can see there's a lot more reward to the upside. Okay, it doesn't mean I'm telling you to take the market long. I'm just saying that eventually the market should find a bottom somewhere, and we'll wait to see where that'll be. We'll probably use our commitment of traders to find that potential point and then look for a change in momentum. So 127 is going to be a key area here for us to be looking to potentially get short again. And then last but not least, in the currency markets, dollar Swiss. This market really is there's a clean area around 99.50, which is, we've got a pending order sat in there right now, and you can see that this through here we've got some lovely structure through this area, and the market clean move up, clean move back down. We're looking to get long through 99.50, targeting around the weekly pivot and then up amongst the previous highs if the dollar strength resumes. Last chart. It is a commodity. We're looking at gold. We've seen that this was a one-directional move from just short of $1,400 right down to just above the $1,100 mark. This is in correlation with the dollar strength. So the dollar strength saw a sell-off in gold. And then this last few weeks, what we've seen is we've seen that correction. So as the greenback has been selling off, we've seen the rally in the safe havens. So around 1,200 is an interesting area for us potentially to get short. If we do see a weekly close above this area, we'll probably see gold touch 1,250, and then that'll be our signal to be looking at shorting this market again on the back of dollar strength. Okay, guys, well, I hope that's been an informative morning update for you. If you do have any questions about Phoenix Blue and our services, or this material, as a matter of fact, please drop us an email to info@phoenixblue. Like the video, leave a comment on here, share it with any potential traders you think might benefit from this information. And shortly we'll be starting 2-week live introductory webinars for all new traders. This is where you can come on board, speak with Phoenix Blue every evening for a 2-week introduction, and then you can see if trading is actually for you. If you've got any questions about this, please fire in as well. We look forward to all your questions, and remember, share these videos and like and comment. We look forward to getting back to you. Have a great day. Bye-bye.